we're going to start with Akamai. Akamai is trading 79.5. And expected move is what? Hang on one second, David. I'll help you in a moment. Okay, so the expected move here is right about 5.25. Yep, it's always easy when the stock is trading right at a strike, right, guys? Expected move is about 5.25, which gives us an expected range then of about 74.25 up to 84.75. Okay, let's take a look at a chart here. Okay, it's made it all the way back basically from the Christmas massacre. All the way back almost to its all-time highs. Definitely approaching some resistance here. Okay, the resistance right here that it hit back last July, and then right before that, when it hit those all-time highs just about a month prior to that, around 83. Okay, so I look at this chart here, and yeah, it's been on a really nice move, approaching some pretty decent resistance. Okay, those areas that we're talking about of 74.25 and 84.75 in terms of support resistance, well, you got the 50-day down at 73-ish in terms of support, and then on the upside, the 84.75, like we just said, has to hit a couple spots of resistance before we even get to there. And yes, definitely went through the golden cross here. Everybody know what a golden cross is? What seems pretty wide, Russell? Yeah, it's exactly that. It's when the 50-day moving average, which is what we have in the red here, crosses over to the upside over the 200 days, 200-day moving average. Okay, that's known as the golden cross. If the opposite happens and the 50 starts trending below, crosses down below the 200, that's kind of known as the death cross. Okay, when you over time, when you look historically at technical indicators, when you see a situation with a golden cross, the 50 crossing over the 200, that's usually a bullish indicator. The opposite is true to the downside. And what this really does is it just provides you a glance at kind of the shorter term momentum of a stock. Right? More so what the 50-day is doing, so a shorter time frame than the 200-day. Make sense? Awesome. Okay, so let's see what we got here. Okay, so someone just said that there's not a lot of open interest. Well, you're looking at the weeklies here, but then when you go to the regular monthlies, it's much better. I would agree. I would definitely agree that it's not as, not as high of open interest as other issues that we look at. But the markets are still pretty tight. I definitely think it's tradable. However, if we find something, that's just out of whack or too illiquid or the market's too wide, we're just not going to do it. But when you look at what's going on here with the weeklies, next week there's not a lot of open interest, but then, like I said, when you get to the monthlies, you definitely have some open interest. Okay? All right, so I look at this and, pretty non-committal in terms of direction. Something pretty interesting, actually, I just picked up here. This had made a huge series of lower lows and lower highs, starting from its high here. Okay, so high to low here, high to low here, high to low here, high to low here. I mean, that's a very bearish pattern, lower lows, lower highs. Now, you're kind of seeing that trend reverse a little bit here. You've got here to here, here to here, now here to here. So this was definitely, this period here, you can easily see how that was a pretty bearish period for the stock. And if anything, I'd say that, it's probably slightly bullish right now, even though there is this big resistance up top here. So, again, I'm not overly biased one way or the other. I don't think that this shows a huge momentum one way or the other. Russell, you talking about earnings back here? So this had just started flipping, and earnings came out and, didn't move much, but did go to the upside here. And you can see if you go back to the October earnings, so the one right before that, where this was markedly in a very bearish trend, the earnings were actually good. You can see the big pop up on earnings here. However, it couldn't sustain that, and boy, this thing just fell right back down. Is that what you were asking about, Russell?
And then ended up buying that put spread back.
Well, the last bull, if you're talking about this last 3-4 months, okay, then it didn't make much of a move here on earnings. Did go up, but not much. Okay, so going back to the area of the expected range, about 74 to 85.
There's tremendous opportunity.
Well, Russell, I want to take in as much data as I can, but the recent trends, just like how we look at, from a volatility standpoint, we look at IV30. The recent trends, really have more of an impact, but I want to get as much data as I can to see if these trends are continuing, if it follows and follows and follows the same type of pattern. History repeats itself. I want to take advantage of that. Okay, so this iron condor right here is, 2 to 3 years. Thank you, Michael. This iron condor right here is really not bad. It's not bad at all. So the 74 half, 73 half, and 84.85 iron condor for 50 cents puts us break evens of 74 to 84 and a half. Now, tiny bit, God, I keep doing that 4 instead of a dollar sign. Tiny bit light to the upside, but remember, I'm okay with that here. Remember all that resistance that we saw on the upside. So if I'm going to be a little bit light on either side of the expected range, I'd rather have it to the upside. And here's one, guys, where if we can do this, it's a big if, but if we can do this, we're getting that one-to-one that we look for. Right? We have not seen those opportunities. We have not seen many of those one-to-one opportunities on a on a credit spread. So for a non-directional, range-bound type of setup, I think this is actually great. Everybody see what I'm looking at? Any questions on this? Because I'm going to put this signal out. Again, I don't know if we're going to get filled here, but I like it a lot. Thank you, Peter. Anybody else? What do you mean by the collateral, David? It is a spread. It is a credit spread. Yeah, selling an iron condor. It is a credit spread. Roger does have better open interest. However, I don't want to go that far out for an earnings play. Oh, what is the... Okay, you tell me, David. So you're talking about margin. When you say collateral, you're talking about margin, right? Okay, so I'll put this up here on the whiteboard, but what is the most this could ever be worth, guys? What is the most this could ever be worth, whether the stock went to 0 or the stock went to 500? Okay, what is the highest value this could ever be? No, so the biggest, the greatest value this could ever trade is the width between the strikes. So regardless where the stock goes, this thing can only be worth $1. So, David, if we sell this for 50 cents, what is our margin, collateral, reward to risk? It's 1-to-1. That's what we really, in an ideal world, that's what we want to find in a credit spread. We want to find something that can allow us 1-to-1 reward to risk, as long as that risk, the break-even area, is out to the expected range. Make sense? Yeah, but now you can see, though, I just put it up there, so maybe this helps out. Now you can see how it's actually 1-to-1. We can make 50 cents, we can lose 50 cents. All right, so what you'll also notice in this signal, guys, like what I have on the whiteboard here, is I adjusted the strikes up to the 85, 86 on the call side. Now, I don't know if we're going to get filled, okay? But what that does then, if we're able to sell that for 50 cents, it now adjusts that upside break even to 85.5. And I'm going to wrap this up. We got the signal out there, and I was talking to actually Charlie Moon about this early in the morning, or like way before the opening, about NVIDIA. And he is unbelievably bullish from a technical standpoint. I think he is putting a signal out right now, which I'm going to look to see if we can hop on, take advantage of somehow. All right, any questions on this, guys? All right, let me wrap this up, get this in the room, and I'll be right back, guys. We'll discuss NVIDIA.